It's going to be a busy week for Fed speak, and we're starting all of that with Richard Clarida. For that, we're going to turn to our Steve Leisman. Hey, Steve.
Hey, Carl, Richard Clarida, the vice chairman of the Federal Reserve, being the most senior person since Fed Chair Jay Powell last week, to talk about the new policy statement where the Fed has announced it's averaging inflation. And he says, he's providing some clarity. He says the new policy is a, quote, robust evolution of the Fed's prior 2% target, noting that low unemployment rate by itself will not justify rate hikes under the existing rules. And he notes that the Fed has learned that withdrawing rate hikes too soon prevents the expansion from reaching all communities. On the issue of further guide, he says that new policy elevates the importance of keeping inflation expectations anchored at 2%. On the issue of policy, he says the Fed is prepared to use its full range of tools. And maybe a little heads up on what's happening in September. Don't know if he means to hint at this, but he says forward guidance and asset purchases have been and are effective sources to support the economy. Goes on to say negative policy rates are not attractive for the U.S., and the potential benefits to yield curve targets, quote, may be modest and are not warranted in the current environment. He does say, though, yield curve targets should remain an option. So, Carl, maybe a little heads up on what's happening in September. Don't know if he means to signal that we could get more information on asset purchases, but that's certainly something that's in the market right now, or some expectation of it. Carl?
Right. So characterize, Steve, the degree to which this puts Powell's speech into some finer resolution.
You know, it just puts a little clarity on the edges where what economists are trying to do is sort of figure out a more mathematical way to approach this, Carl. I'm not sure Clarida does this for us, but we last week have had several interviews, including one on this show, where we had a couple of Fed speakers say, hey, the 2.25% to 2.5% is what we mean by a modest uptick in inflation. So, and we'll see, because he's going to sit down with Adam Posen from the Peterson Institute to see if Clarida himself puts that kind of clarity on how high an inflation rate is acceptable to them.